There's no doubt that the most popular real estate investment trust out there is Realty Income, stock ticker O, and this is something I was actually talking about on my Twitter account the other day. If you invested just $1,000 in Realty Income at its IPO in 1994, $1,000 would have grown to nearly $40,000, annual returns would have exploded, and here's what's really impressive. Assuming dividends were reinvested, we can see the payouts are growing every single year, and again, assuming that $1,000 investment in 1994 would now pay over $2,000 a year in dividends, and the compounded annual growth rate would be nearly 13.29%. So again, it's easy to see why this monthly dividend payer has been a popular REIT for so long. But in this video, I'm going to talk about another real estate investment trust that I believe has the potential to be the next Realty Income Corporation. I'm going to go ahead and jump into it. This is not a REIT I've talked about on the channel before, and that is Agree Realty Corporation, stock ticker ADC, currently trading at $56.84. Now we can see over the past year, this company's down around 16.24%, and year to date, down around 9.71%, leading me to believe they are also the victim of the high interest rate environment like most real estate investment trusts as of right now. Now this company has a nice starting dividend yield, currently sitting at about 5.19%. Before we dig into the actual company metrics, let's go ahead and look at the dividend metrics for this company. Jump over to my dividend breakdown tab, which you can download on tickerdata.com at the link in the description. But go ahead and come over here and plug in ADC and hit enter. And again, you can see all this data will automatically load in thanks to the help of the Ticker Data add-on. Now again, nice starting dividend yield of 5.21%. Now here's something I absolutely have to point out. Look at the 10-year and the 5-year dividend CAGR. Both of them are sitting above 5%. It is extremely rare that you can find any stock or REIT that has a dividend yield starting above 5% and also their 10 and 5-year dividend CAGR above 5% as well. That is a pretty rare attribute. And look at the growth of the dividends over the past decade. It's gone from $1.64 to in 2023 $2.92, and in 2024 projected to sit at $2.96. So this is a beautiful dividend growth chart. It's clear that they are committed to increasing the amount they pay out in dividends and at a pretty healthy rate as well. Now if we jump over to Seeking Alpha, let's dig into these dividend payments some more. First off, if we go over to the dividend history tab, one of the things we'll notice is they recently switched to paying out dividends every single month, just like Realty Income has done for so long. Now, if we jump back over to my REIT valuation spreadsheet, one of the things you'll notice is they have a payout ratio sitting at 167.75%. Now, at first glance, that is a red flag for most stocks, but we have to keep in mind this is a real estate investment trust, and REITs are required by law to pay out 90% of their taxable income in the form of dividends. So it's typical we see a very high payout ratio. To judge the safety of a company's dividend, we actually want to look at things like FCF payout ratio, or more specifically, we want to look at the AFFO payout ratio. So if we go over to Seeking Alpha and scroll down, we can see down here the forward-looking AFFO payout ratio sitting at 74.28%. Overall, I think that's a pretty healthy payout ratio for a REIT. So if we scroll back up, we can already see dividend metrics for this company are pretty solid. There's a lot to like. There's a nice starting dividend yield, a great history of dividend growth. They pay out dividends every single month, and it does look like those dividend payments are safe. Those are definitely metrics that I want to check off my list when looking at potential REITs to invest in. If we go over to this company's website, we can see since their IPO in 1994, they have had an 11.8% compound average annual total return. So that is very solid, and they also have a 6.1% compound annualized dividend growth over the past 10 years. So those are both very solid metrics, especially for a real estate investment trust. If we jump over to their most recent investors presentations, there's quite a few things that I want to point out. So let's go ahead and jump over to the 12th slide. Now, the first thing we can see here is the top 3 sectors for REITs by concentration. Now, a lot of these REITs are very focused on specific industries such as maybe restaurant or convenience and gas, but we can see Agree Realty Corporation is pretty well diversified, with their top 3 sectors only making up 27% of their total tenant base. Now, this is very similar to Realty Income, who is only sitting at about 29%, and really in my eyes, this just means they're pretty well diversified when it comes to their tenants. If we jump over to the 15th slide, we can see the 5-year AFFO per share growth CAGR for this company. Now, this is a huge driver of potential returns for any real estate investment trusts, and we can see they pretty much beat out all of their peers over the last 5 years with a 7% AFFO per share growth CAGR. Realty income came in at around 5%. Now, if we jump over to the 17th slide, one of the things we'll get to see is some of the top tenants in Agree Realty Corporation's holdings. We can see quality tenants such as Walmart, Tractor Supply Co., Dollar General, Best Buy, CVS, lots of companies that we are familiar with and can feel good about being in their portfolio. We can also see that out of all their retail sectors, no tenant sector makes up more than 10% of their total annualized rent base. Again, this is a very well-diversified REIT. If we keep scrolling down and look at the 18th slide, we can see the vast majority of their holdings are considered investment grade. Just like I mentioned earlier, we see lots of quality tenants like Lowe's, Costco, Walmart, Sherwin-Williams, Target, Chick-fil-A. So again, it's worth noting, these are high quality tenants. And then finally, if we go over to the 33rd slide, one of my favorite things, we can see phenomenal dividend growth, just like we already touched on. They have 144 consecutive common dividends paid, and the average AFFO payout ratio over the last 10 years is sitting at 76%. So it's been very steady, something I love to see. Now, if we look at some recent news regarding the company, we can look at their most recent earnings report, which was in mid-February. We can see Agree Realty reported FFO of $1 per share, which was in line with estimates, and then they reported revenue of $144.17 million, which was up over 23% year over year and beat expectations by close to around $3 million. Now, like I already touched on, despite this, the company is still down around 15.9% over the past year, but we have to keep in mind they are definitely victim of the high interest rate environment. These are the highest interest rates we have seen in over a decade. And so investors looking for steady, predictable, solid income obviously are going to be moving their capital into places like high yield savings accounts or bonds, but you have to keep in mind this creates opportunity when we're looking at real estate investment trust. If you're someone who needs predictable income, sure, maybe there are better opportunities and safer opportunities with bonds and high yield savings accounts, but if you're a long-term investor, this definitely creates opportunities, and it's pretty clear that the opportunities are in the REIT sector as of right now. If we look at a year-to-date heat map of the S&P 500, we can see green pretty much everywhere, but if we come over here, look at the real estate industry, we can see there is a lot of red in the sector, again, leading me to believe that interest rates are creating opportunity in the REIT market. So like we've already seen, there is a lot to like about Agree Realty Corporation from a dividend perspective and from historical data perspective and just from their tenant base. But with the company being down around 16% over the past year, we have to ask ourselves, is the company trading at a good value at $56.84 per share? And to answer that question, we are going to jump over to my REIT valuation spreadsheet, which you can download on tickerdata.com at the link in the description. So let's go ahead and run this company through a few different valuation models. We'll come up here and plug in ADC and hit enter, and you can see all this data will automatically load in. Now, one of the things I want to point out about this REIT is the beta is sitting at just 0.51, so you shouldn't see very much volatility with this company, and that is an attractive feature for a lot of income investors. Now, if we keep moving forward, the first valuation model we're going to run this through is going to be our AFFO multiples valuation. Basically what we're doing is we're looking at how the market is valuing some other REITs that are similar in structure and looking at their price to AFFO multiple. And we can see the average price to AFFO multiple for these companies sitting at 14.785. Now, ADC's current price to AFFO sitting at 13.95, a little bit lower than that average of their comparables. So if we applied the same average PAFFO to ADC, we'd get an intrinsic value of around $60.24, a little bit above the current trading price for ADC. Now, if we jump over to our historical price to FFO model, this is a valuation model that I really like for REITs because basically it allows us to see how they've traded and what their valuation has been over the past decade. So we can compare where they are now to how they've traded over the past decade. So I plug in the historical price per share for this company, look at the historical FFO per share so we can see our historical price to FFO valuation, and we can pretty much see how this has been charted out over the past decade. So it looks like in 2012 it was sitting pretty low at around 13.42, climbed up for quite some time, and now it's dropped back down. So on average over the last 10 years, the average price to FFO for this company is sitting at 18.18. Now for the trailing 12 months, it's sitting at just 15.91. So what does that mean? Well, basically, historically speaking, this company is trading at a much cheaper valuation than it has over the past decade, another indicator that it may be undervalued. Now the last valuation we're going to look at is going to be our dividend discount model. Now this values a company based on how much they pay out in dividends and how much that dividend is increasing over time. And for Agree Realty in this scenario, I'm assuming a dividend growth rate of around 3.25% and a discount rate of 8%. So with these assumptions, you can see we come to a dividend discount model price per share of $64.34. So if we jump over to our output tab, we can see the two different valuations that we used here, AFFO multiples and dividend discount model. We need to keep in mind the historical price to FFO is not showing up on this output tab, but we did come to the conclusion that it looks like the company is undervalued compared to where it has been historically. But if we average these two other valuations, we come to an intrinsic value of $62.29. Now the current trading price for this company is sitting at about $56.84. So with a 10% margin of safety, it looks like our acceptable buy price sitting at about $56.06. So the company is very close to being that acceptable buy range with a 10% margin of safety. With a 20% margin of safety, you're looking at an acceptable buy range of around $49.83. Now, if we go back over to Seeking Alpha and look at the past year, we can see their 52-week range is as low as around $52.69. So there have definitely been opportunities to buy this company with a decent margin of safety. So in my opinion, it looks like there is a lot to like about Agree Realty Corporation as of right now. It looks like they're trading at a pretty good value. The dividend metrics look pretty solid, and if we see interest rates decline, I think we'll see the share price of this company start to increase over time as well. So as for me, I don't currently plan on adding shares to my portfolio. I don't own any of this company as of right now, but this is definitely a company I'm going to be putting on my watch list and watching very, very closely. So go ahead and comment down below what you think of Agree Realty Corporation and if you think they have the potential to be one of the best REITs over the next decade. Now, like always, if you'd like to be able to download any of my spreadsheets and also get access to the ticker data add-on on Google Sheets that allows you to automatically pull in stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description, and you can also get a 7-day free trial there. So with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.